Hello and welcome to a new video series on this channel. I've been meaning to start to do this every week. If Saturdays are reviewing the week that was, and I do a video for that, and Sundays are for planning the week to be, then I need to do a video for that as well. So it's going to be a good way to organize my thoughts. This is the planning for the week to be for the week ending July 31st of 2026. So one kind of technical trigger that I saw that manifested late last week. I think it was actually like in the middle of last week. So in other words, the weekly candle, if you look at like this doji that formed in the Bitcoin gold ratio, we basically stabbed up into the previous high of this large weekly down close candle, and we've now completed the pause CRT. So in other words, if this is the origination candle, 1, 2, 3, 4, 5, 6, 7, 8, so that fits my model on the weekly time frame. So I'm expecting for next week's weekly candle to be a bearish weekly trending candle down to 15 even in the ratio and below, and I would love for price to try to tap back up into that 16 even number and then dump lower. So drilling down to the components of that ratio, obviously you have Bitcoin. If Bitcoin trades back up into the 65,000 round number, 65,100 or so is the beginning of the daily bearish order block, because you've got a large fat up close candle swing high SMT with Ethereum, and then you've got a bearish fair value gap that formed on Wednesday there. So the Bitcoin is bearish as well in dollar terms. It's not as clean as the Bitcoin gold ratio, but as far as like a weekly projection, I would love to see Bitcoin just immediately smash through all this LR that has built up. So we could be even trading down into the mid 6100s by the end of the week, just looking for a bearish downtrend candle. Here's Ethereum. So I was a little bit disappointed in Ethereum and disappointed in Bitcoin actually last week, that Ethereum never really completed its pause CRT model, but at the same time it never actually filled this fair value gap as well. So that's actually fairly bearish. So in other words, if you treat this as the origination candle, even though it hasn't been completely souped or pause CRT'd, then you have 1, 2, 3, 4, 5, 6, 7, 8. So that really fits the model. So next week in Ethereum, I'm expecting a large, a weekly bearish trend candle, a little lower. Just as far as like the timing of these moves, we started a new quarter in the first week of July, and now we're far enough into the new quarter to where you really would expect some early quarterly swing entries occurring. And because crypto has been so bearish, then those early, the whole like macro context of crypto being as bearish as it is, you'd expect the quarterly swings to occur pretty much as early as possible. There still needs to be that accumulation into manipulation that occurs. And so if a quarter is 13 weeks, and so you figure 25% of 13 weeks is like 3 or 4 weeks, right? So if you have we've been waiting 3 or 4 weeks, right? So that's that first that 3 or 4 weeks into the 13 weeks, that's when you're going to expect the accumulation into manipulation, just like with a daily candle. If the day's got 24 hours, obviously the first 6 hours, right, you're going to expect accumulation into manipulation. At the very soonest, it might take longer. It might take into the London session. And we're going to see this. So with Forex, I think the exciting pair to trade is the pound. The pound has, I didn't actually see this last week. I wasn't like watching the pound close enough to see this. But if you consider this as the origination candle, 1, 2, 3, 4, 5, 6, 7, 8. So that's my model there to be short in the wick. But there's continuation that that we should be looking out to occur, especially given like the bearish risk off lean of everything. And I'll show you some other examples of that later on in the slideshow. But basically, next week could be the week to where we trade down below this weekly low. So the weekly low into 32, spot 32 is a great downside target. We could even be trading further down into the overall weekly swing low draw on liquidity next week, but that's like kind of aggressive to assume that. We're definitely going to look to cover this fair value gap, this weekly fair value gap next week. We'll trade down at least into the high of that doji that formed the swing low. This is the pound on the daily chart, and this would be like a way I would like to approach trading this, where we might actually have Monday be a bullish day in the pound with a maybe trading into the open of this daily candle, or maybe even doing a full CRT into this fair value gap. But I actually think that this fair value gap qualifies as one of the 2 remain unfilled gaps. This level right here, so if you draw a horizontal line at the daily open of this large bullish Romeo order block, it really is a Romeo order block, right? Because it's a large up close candle, swing high, bearish fair value gap. So the opening of that candle is a really great place to then get short. We got a daily order block. This is the daily Romeo order block, but then you've got this within this daily down close candle, this wick of this candle, there's an order block within that one as well. So yeah, looking to be aggressively trading the pound next week. I love trading Forex if I can find market conditions that are reasonable to trade it. As far as the Aussie, I was actually looking for a little bit more bearishness in the Aussie late last week, but then I realized that we actually have Aussie CPI, we have Aussie inflation data due for Tuesday, 9:30 p.m. Eastern Standard Time. And so I'm thinking that's going to be the trigger to be the pause CRT. And then I looked at the daily chart in the Aussie, and I realized that there's a daily Romeo order block that hasn't been tapped into yet. So that would just be an excellent place to see a nice like a long wick reversal, kind of like trading. You'll have like the news might be bullish for the Aussie. The Aussie economy is actually doing pretty well, but there just are too many macro factors to with the dollar rising and lots of constraints on FX, to where you could see a pretty good bullish manipulation and news continuation from the CPI release, and then a dump after that. And that would be a good place to then form those bearish SMTs with the correlated asset, which would be the New Zealand dollar. And so here's the New Zealand dollar. So if Aussie clears the previous week high and basically makes higher highs, New Zealand dollar is in a great position to then make lower highs on the daily chart with respect to especially Aussie, but also just its previous weekly high there. So this swing high here, that is essentially a formerly turtle souped level relative equal highs, this forms a Romeo order block. So this because this is a daily swing high, bearish fair value gap. So I could see the Kiwi, the New Zealand dollar, trading up into that 50 spot 58,200 level and a little bit higher than that, and then dump. We're looking for like a pretty early on in the week delivery lower to at least the 50% of this range. So in other words, if we have like a weekly, if we print like, the 5 daily candles and have the low of the week maybe fill that fair value gap, that would be a pretty reasonable assumption. We might even see something even more violent and just completely have a kind of the bearish rug pull in foreign FX down to this 56,300 level. Yeah, and so what's causing all the Forex? What's causing all the rumbles and the risk off? Well, it's this energy constraint coming in, and the idea of crude rising, dollar rising. So, I think I mentioned this before, and Romeo has had like literally 3 call-outs he's had. So he had a kind of a more cryptic call-out this week, and he said this is the week of like the last week of June, and he said, dark times are coming, right? And then he has, he's got these other. He basically had a real blatant. What would you think of? What would you expect to happen if crude hit all-time highs? And so this is what I'm seeing here. Is I'm actually seeing. This is the weekly chart for crude, and basically from this manipulation, if you do the ratio, it's 5 or 6 weeks of distribution expected. So in other words, we're already 3 weeks in. So the next 2 or 3 weeks, or even 4 weeks, in crude look to be incredibly bullish. You can see that there's like a really, really intense new week opening gap that they really want to fill with a really fat-bodied up-close weekly candle. The way you fill a gap like that, a gap disjunction or a new week opening gap, is you need the open to be below and the high to be above, or the open to be above and I'm talking too fast. You need for a bullish candle, you need the open to be below and the close to be above, and that creates the candle body, which then from a market making perspective fills the imbalance. The other thing that could really fill the imbalances on the daily chart is if you have a large up close candle and then a large down close candle, especially the down close candle like being tapping into that area for the close. And what that does is that creates a daily order block. So a daily order block in the previous new week opening gap disjunction would be a really efficient thing for the market making to have covered. I mean, you can see it a little bit here where this new day opening gap, I think it was it a new week opening gap? Yeah, that was actually a new week opening gap as well. So like this new week opening gap to the downside, this is probably like the MOU, like kind of a peace hope trade. But you have this large trending up close candle that closes in the gap, and then you have kind of an order block, not a perfectly overlapping order block, but another down close candle, so that you have like a good exchange between buyers and sellers in this former inefficient area. We need another one of those. We need another good exchange between buyers and sellers. So one part of that recipe is a large daily up close candle, and so we are going to have to be really vigilant here if we're going to trade crude to be looking for a large daily bullish candle to form. And then I was mentioning foreign FX and risk off, and this is the 10-week yield. Sorry, the 10-week. This is the 10-year U.S. Treasury bond yield, so 10YY, and we've hit a key level. So we hit 4.700 even, and we have had a pretty good, though not conclusive, reversal. So we have a potential reversal forming. with the bonds. And I think, if so, let's look at the weekly. So it's a 10 weekly candle model. If that's the origination candle, we'll look to turtle soup that high. The fact that we had a weekly close below that, we could have that other weekly open, and we could spike up maybe into 475, with like a, it really is. It's just scary energy component of inflation, scary defense spending getting out of control. There's like lots of kind of bond vigilante and inflation hawk type of dynamic with the bond trade right now. But next week is going to be like a really important week. Not a trending week. Like I'm actually imagining next week being a doji. So in other words, if this large up close candle is candle number 1 on a classic 3 candle CRT, then you'd expect next week to be like the doji for that guy. And then week 3 of that weekly CRT model, which is going to be the first week of August, that's when you see that full, like, crank the taps open, like full risk off. Like, we're actually bullish for bonds, we're bearish for the yield, right? In a full risk off scenario. So that would be like that 3 candle weekly CRT. This is a perfect, this is like textbook. This is textbook for looking for a weekly 3 candle CRT. I could be wrong. I mean, we could see, like, obviously expect continuation, but like watch the close of next week's candle in the 10-year bond, because if that close is below that key level and we had some good run into buy side liquidity that was rejected, then you are expecting candle number 3 to be like the distribution into these lows and into potentially making the, like that, like you're talking the next the following 3 weeks to be extremely bearish to get us down to that level again, just week after week after week of bearish, essentially it's bullish for bond, bearish for the yield. So it's like if you look at like the TLT index, which has a mixture of long duration treasury, US treasuries, the TLT index is like near cycle lows, near record lows. TLT index is hurting. I mean, we have like, there's all these different components to like who the bond yields influence, but one chief among them is the US real estate market. And so this is not a very comfortable place to be for mortgage, the loan origination business. All right, guys, I'm gonna sign off now. Thank you for listening to me as I